3 lakh and 50,000. So 24B 2 lakh and 80 EEA 1 lakh 50,000. So maximum deduction is restricted to 3 lakh 50,000. This is 80 EEA. Next one, 80G. This is concerned with deductions in respect of donations made by an individual or by any other assessee. So all assessees, regardless of their status, who may be an individual or a company or a partnership firm, they can claim deduction. So an individual is also eligible to claim deduction under section 80. What are the qualifying payments? What are the steps involved in the computation of deduction? This section is a complex one. So let me explain the deductions available in a step-by-step manner. First of all, one has to find out the aggregate amount of donations made. Donation may be given to a charitable institution or to the central government or any charitable trust or scientific research association. So these payments will be aggregated under the head gross qualifying amount. So the aggregate amount of donations or government must be aggregated. This step is step one, calculation of gross qualifying amount. So gross qualifying amount simply tells how much amount of contribution has been made. In the second step, net qualifying amount is derived at. Gross qualifying amount will be compared with the monetary ceiling. In respect of certain payments, net qualifying amount is equal to gross qualifying amount. In respect of certain payments, the net qualifying amount is restricted to 10% of adjusted total income. So in the second step, we compare the gross qualifying amount with the monetary ceiling, which is 10% of adjusted total income. Least of the two will be the net qualifying amount. In the third step, we compute the amount of deduction. In respect of certain payments, 100% of the amount of donation is deductible. In respect of certain payments, only 50% is deductible. But before claiming deduction or before certifying the correctness of deduction, it must be ensured that deduction is not paid to an individual or deduction is not paid to unapproved institution and deduction payment is made not in cash. So these three conditions must be ensured. However, the Act permits payment of cash donation up to rupees 10,000. So any individual who makes donation can make cash payment up to 10,000. Once the donation amount exceeds 10,000, it must be paid by way of check placed where he resides. If these conditions are fulfilled, 10% of adjusted total income. Least of the three figures is the amount of deduction under section ADGG. For this, adjusted total income means gross total income as reduced by deduction under section 80C to 80U except 80GG, income under the head long-term capital gains and income covered by section 111A. Next one, 80GGA, contribution to associations or institutions for carrying out programs of rural development. The main condition, one must not derive income under the head profits and gains of business or profession. Once this condition is satisfied, 100% of the contribution to an approved scientific research association or other institutions engaged in carrying out programs like poverty alleviation program or poverty eradication program can claim deduction. The quantum of deduction is 100% of approved institution. This section has less significance next section is section 80 GGB and 80 GGB. GGC. Both are totally related to each other. One is 80 GGB and another one is 80 GGC. Under section 80 GGB, an Indian company can claim deduction in respect of contribution to notified political parties and electoral trust. 100% of the amount contributed is deductible in income of the company. Under section 80 GEC, local authority and artificial juridical person not funded by the government can claim deduction in respect of contribution made to political parties. The quantum of deduction, the book authored by him, must be of artistic or literary nature. It means for school books, or college books, or for commentaries or diaries, one cannot claim deduction. And third one is the amount of royalty of the value of book author. If the royalty income is by way of lump sum consideration, the maximum amount of deduction is $50,000. Next one is section 80U, deductions available to physically handicapped persons or physically challenged persons. This is a residual section, and under this section, an individual who is suffering from physical disability, maybe having ophthalmic problem or hearing impairment or leprosy, whatever may be the physical impairment, one can claim deduction under section 80U. What are the conditions to claim deduction? The taxpayer must be an individual in respect of which an individual can claim deduction. The 80G, 80D, 80.